perfect timing. I got a question about um the cryptos, because a lot of them, when you looking at the chart on a monthly level, in case that's something I wanted to ask you, it's perfect timing. On the monthly level, it's not that much action because they just started. You know what I mean? So
Correct.
how do you? Okay, so just show me like how do you so you go more so where you can show or see action like on the daily or like the weekly time frame.
Right. So start doing the top down analysis on the cryptos. Right now, it's pretty simple for the monthly, because of course, like you said, there's not really a lot of action on the monthlies, of course, because most of them are new. They pretty much simply have either a high or a low. There's really nothing in between on the monthly charts with working with crypto. So all you really have to do for the top down on crypto is literally right here. We'll go ahead and do a top down here on this XRP, because this is actually one of the cryptos that I'm most heavily involved in right now, XRP, because it's one of the cheapest. So it has one of the largest room for potentials right now. Of course, they're going through that little lawsuit with the SEC or whatnot, but that's just holding them down momentarily. They're gonna bust right up out of that little. But just to start on this top down with the monthly, literally, all we have to do is hit this high and literally hit this low. This first breakout area was right around here at 23 cents. So really high and the low, and we can find some levels in between, like this level right here. And again, right here at this break level right here. So really on the monthly, that's all we can really portray off of XRP and some of these cryptos. Like for example, with Bitcoin, let's pull Bitcoin up. Bitcoin's almost similar. It has a little more movement on the monthly, but for the most part, it's the exact same way. Here's the monthly on Bitcoin. It's got a little more fluctuality, but we would just simply hit this low, and again over here, this high, and then this supportive low right here on the monthly. And that's pretty much all we have data to work with on the monthly. So you would automatically start going down into the weekly. Here on the weekly, in those levels, we would really want to just focus on this area right in here. And from in this area, as we can see, there's a high here, and inside this zone, the low would be here. So that's the monthly, that's the weekly, and then bump down to the daily, and we'd be left with this data here. And we do the same thing again, hit this low or hit this high peak. And as you see, as soon as I hit this area here, it brings us exactly to where price is right now.
Mm-hmm.
And this right here is the one of the all-time highs. Well, no, it's not actually. It's actually over here at 63. Once we bust out of this current little range that we're in, made actually it was made Friday. No, that's actually yesterday. This candle right here is what created a range. So just boxing that out, we'll bump down to the 4 hour. Inside the 4 hour, which is now we're getting close to real time, which is right now, that's the range that we're currently in. So from there, this peak range would be the high of this range, or the high level of resistance in this range would be right here at the open and close of these two candles. From there, the hour chart is what we open up next. And now we're brought into here. And as you see, that clean range that has presented based on that one candle that we just, with the wicks on both sides, that one doji candle from the daily, which would really be considered Sunday, because today, as the market opens, it's Monday. It's Monday on the Western hemisphere. That candle right there is what created a range. And really what this particular candle does when it's formed at a peak or a supportive level, what I like to consider is it cleaned the board. It hit both sellers high and buyers low. And pretty much if you over risked yesterday, your account, whether you were a buyer or a seller, likely you got bumped out or blown away based on the way these wicks shot up on both ends. So now what we're going to be looking at is that retest to that low, which is right here. Right in here. And as you see, it's in perfect retest right now. So if you did want to take a position on Bitcoin, right now would be one of the best opportunities, as it's touching our 47.591 support area. It's at the bottom of the range now. So coming in from here off the hour, we bump down one more time. Now this is a complete top-down analysis here on Bitcoin. As you see with the cryptos, it's pretty simple because there's not a lot of data and we know it's just going up. So now that brings us down here to the 30-minute, which puts us in actual real time. I'm gonna actually make sure this is a straight line. Again, to make sure I have a straight line when I draw a trend line vertically, all I do is copy and paste these coordinates to make sure it's a straight line. So now what we're looking at, now we can start using our intraday rules and start looking for our key trigger levels and our key trigger entries. And again, we look for our key trigger levels once we get down to the hour and below. So once you do your top-down analysis and you get down into the 1 hour and below, that's when you start to identify your key triggers where you're actually going to pull the trigger and enter the market. So as you see, looking at this, based on the fact that each one of these horizontal period separators separate a day, you can see how right now we're at the low of today. We bust down to the low of the day within the first, the new day starting at 2 o'clock. So within the first 30, 45 minutes, as you see, price went straight to hit the low. Now, while it's doing that, we know on a daily basis, when it comes to our intraday rules, our entries are likely going to be when the high or low of the previous day is tested. So if we look back 2 days to Saturday, we have Saturday's low here. Sunday's low was here. So Sunday's low breached Saturday's low, but immediately came right back up and closed above Saturday's low. So at this situation, we can use Saturday's low as a supportive level where we're at right now.
Right.
So with that being said, in this situation, the low of yesterday is currently being tested right out of the gate right now, 45 minutes into the new day. This is also the new week. So this is actually a new weekly candle that we're seeing being created here. And off of this 30-minute, from here, now, of course, since the low's being tested already, also looking at the RSI down here. RSI, of course, when it's above the 50, that's a bullish trend. Swing low, swing low. Swing high, here's the swing high right here. This right here is considered divergence. When price action, are you familiar with divergence?
A little bit, yeah. When price action is going the other way.
Okay. And right here, this is a perfect example of divergence due to the fact that we have a higher high on the actual price action candlesticks, but we see a lower high made on the oscillator, which measures the momentum. So what that's telling us when we see divergence is price is continuing to go up, but momentum has declined. Then if you look right here as price is on stuck here on the 50, when price is trending above the 50 on the oscillator, we're looking for this type of movement. This 50 is playing support here for the momentum, as well as price can't break lower. So now with the oscillator, the RSI being right here at 50, we know the next move is going to be this way, and price action is going to follow.
Okay.
So with to make a long story short, that's really all we had to do here on this Bitcoin top-down analysis. That's why I said the cryptos are somewhat pretty simple for the most part now, because they don't have as much data and peaks and trends as the regular typical currencies that have been around for 20 years. Crypto is just literally trending up. It has minor retraces, but this last quarter was probably the last retrace we're going to see on crypto for a long time, due to the simple fact that all the economic discussions are now focused specifically on crypto, which is bringing more momentum and exposure and volatility to the market.
And so we're now, as far as like, the trend is going up, but you see it's going down. This is one of the moments where you would just wait a couple of days. Once you've seen that trend starting, is when you seen it going down, you would just wait a couple of days.
In this situation, I would actually be prepared to pull the trigger on a buy any day now, within one of the next 5 trading sessions. So by Tuesday, I expect from where we're at now here on the daily by Tuesday, I would expect price here at Bitcoin to be popping up out of the top of this range here.
Right.
So with that being said, the best time to actually be pulling the trigger is as price is getting rejected from this LOD here. Like once the current daily, which we're in today, low is set, I'd be ready to pull the trigger for the neck and hold it for like the next 3 months. Hold it till Christmas. One thing a lot of people haven't noticed, of course, because depending on how long they've actually been in the market and how many seasons they've actually seen the market trend, don't realize that in the fourth quarter is when crypto makes the biggest moves. From October to December, or October to January, crypto, if you look back on just the historical data, all of the major gains have been in the fourth quarter. And I firsthand know that, of course, because I've been following it for the past six years. And every single time October comes around, they get the crypto gets ready to shoot up and knock out a new high. Just like if you notice back in January, let's go back and see exactly what month that was in. I believe it was January though. Yeah, January, February. If you look at this all-time high here, this was formed in April. So this would have been April, this would have been March, this would have been February. But as you see, the bull run began back in here, right here in October. So this is the beginning of the bull run back in October 20. This is the beginning of the bull run here now, October 21.
Mm-hmm.
And it's literally been like that every year when it's made new highs or new all-time highs. Like even back in 2017 when Bitcoin cracked 10,000, when it jumped from 1,000. If you look back here, and I was actively in the market here as well, back here in October, right here. As you see, it's a trend, October on out. Fourth quarter is when they take on their gains. And we're here now in the fourth quarter, ready to run it again. It's fascinating how the market, and when you think about it, it runs hand in hand with some of the environmental or economical issues that are playing out right now in real time.
Yeah.
It's like so fascinating to me how that shit matches up every time. It really is.
You know, it's crazy. Like after you taught me this stuff, and I start the chart that I like is US. So I was paying attention to it, and it's because it's called US 30. I didn't really, put too much mind into the fact that it's the Dow Jones Industrial until I started hearing, like when I was paying attention to the chart and I was seeing it retrace, and I was like, I kind of knew it was doing it, but then I heard them talking about the economy is crashing and stuff like that, and I was like, it's because they were saying like,
and now you see how US 30 is beginning to crash,
making new lows, and
I said, and now have you noticed how US 30 is now beginning to crash? There's actually a major stock market crash predicted for the next 3 weeks. Over the next 3 weeks, we are going to see the stock market crash or fall so hard. Like they say, last year they said it was one of the largest stock drops or stock losses in history. No, it's right around the corner. Like within the next 3 weeks, like if I pull up US 30 now, for the last week was horrible for US 30, I believe, if I'm not mistaken. Let's pull it up.
Yeah, this last month was bad.
Yeah, see, last week is when the decline started. If we zoom out here, it peaked out at its all-time high. And one thing we know just from traders, just from being traders, is we know what goes up must come down. And US 30 has been on a run for the past 20 years with no hesitation other than right here. And now that I'm eyeballing this right now, I can automatically see a harmonic pattern. Are you familiar with harmonic patterns?
No.
Oh, excuse me. Okay, see, right now, just glancing at this chart, I can see it from are you familiar with that IML group?
No.
Okay, well they built their whole campaign and stuff off. They have a special little indicator that paints out harmonic patterns. Harmonic patterns are patterns formed by a series of Fibonacci equations or Fibonacci ratios. I'm gonna display exactly what they do with that harmonic. They charge, I think it's like $199 a month for their little automated harmonic system. But if you know how to read the charts, you don't need it because even their system is wrong. You know what I'm saying? At the end of the day, systems can be wrong when a natural human being can actually make adjustments in real time. But automated systems can't really do that. That's why I always tell people it's best to learn the market and how to use indicators in your favor rather than use indicators and let them try to show you the roadmap, because there are times where automated and technology can be wrong, because technology is programmed to do one thing and it has no, it's not like it's artificial intelligence. It's a indicator coded to pick up on certain specific numbers and data. It's not artificial intelligence. Indicator is specifically designed to do one thing, and it does exactly that. But for this example, using the Fibonacci, if we look here, we got a peak low, and then we got a peak high before we started seeing the lower low trend here. So as I have this mapped out, watch what happens when I pull this Fibonacci out. It's going to be almost, I want to say 100% accurate, but we'll see exactly what happens when I put it on the chart. Are you familiar with the Fibonacci?
Yeah.
Okay. So now here at the Fibonacci, you see how that swing low that we mapped out fell right on the 38?
Mm-hmm.
So here we got the swing low, here we got the swing high, and then here we got the retracement to the 38. Now using the Fibonacci, we know, okay, let me actually go ahead and paint the first pattern of the harmonic out. It's gonna be swing low to the swing high to the retracement. That's the first leg of this particular harmonic pattern. Now we know about the Fibonacci levels, 23, 38, 50, 61 are areas for retracement and for it to bounce and continue on to its trend. As we see here, that bounce came on the 38. Now, this is also an ABCD pattern. An ABCD pattern is first a swing low to swing high. That is the first leg of an ABCD pattern. I really like trading ABCD patterns for the simple fact that they always give you a safe entry at the retrace. So here we got, I'm gonna draw it out. Here we have an A, here we have B, and C is going to be whatever level, 23, 28, 38, 50, 61, or 78, wherever price stops. So in this case, our C point would be at the 38, right here. Now, D is the expansion of A to B. So this is D. I can already see now that this is D. And I can see it just because I've been doing it for so long. So we have A to, shit. Oh, 1 second, I dropped it. Okay, we got A to B. This retracement here comes at C, which is here, the very low of that peak. B is gonna be here. A is gonna be here. Now, looking at this situation, we've got our expansion points for D. D is going to be either the expansion 161.8 or anywhere in between up to the expansion 100. And this expansion 100 falls at 38.20, and the 61 falls at 34.63. So anywhere in this zone would qualify for a D point. Now, based on harmonics, from D, you hit Z, which is a Z point. Now, Z point is the retracement from C to D. So now, let's remove all these Fibonacci's. Z point, which just at a glance is likely going to be back at A. Z point is the retracement from C to D. So, and based on this pattern that's forming here at this peak, as you see, of course, now this goes back to about tracking the trend. A trend is a series of course, the series of higher highs, higher lows consecutive. So looking at this previous trend or rally on the month, you see we have higher highs, higher lows, higher highs, higher lows. Even this little pause right here, these lows didn't exceed this one. So the trend was still, of course, an uptrend. Higher highs, higher lows again, higher highs, higher lows again, until we get right here. Some people like to hear me say, "I'm trend over." Trend is over as soon as we start to see lower lows and lower highs, which was formed by this engulfing candle right here. That sealed off this C to D leg. That one candle right there locked it down by painting that lower low and lower high. So now on this candle, we have a lower high, and we'll likely close this month, may stagger and just close about right here, something like that. But the rest of the year, we're coming to Z. So as far as this US 30 month goes on a long-term basis, you're going to be wanting to get ready to find a real nice sell position. And that sell position either is, of course, like as I said, going to be one of these retracements from C to D. So we got A, B, C, D. And then Z is going to be here or here. And that harmonic would in turn look just like this. Based on the geometry, it's going there. So that would be a harmonic pattern. And I can actually pull up some examples real quick. Harmonic patterns are extremely powerful. Powerful. Okay, so for example, here's, let me pull this over. Check this out. One second, it's loading up. Okay, so the chart I was able to find is actually some of the top harmonic patterns. So that's perfect because we just literally drew one on our screen. So here are our harmonic patterns. The one that we're likely getting here and as you see, it's just a sequence of Fibonacci's and retracement points. The one we are likely getting is, where you at? This bullish pattern here. Let me see if I can highlight that.
I want to share this story.
This is the pattern that we're likely getting in real time right now. A, B, C, D. And then your next buy would be at D. And that's where it would come back up here. Notice how in the formation of this particular pattern, this level here is a resistance or support level. So just with knowing that resistance and support is always retested, we can literally trace it like this. You see that?
Yep.
within the next coming weeks, we're going to see the stocks fall pretty steadily for, if we just want to estimate, this move here is going to be over about, let's say, I want to say about maybe 2 years. Yeah, I want to say this is probably roughly going to be about, yeah, about 2-3 years. We'll see this decline come. So we'll see the stock market on a fall till 2027, 2026, somewhere right in there. We'll see it literally be at a steady fall until about April 2027.
And when you say the stock market,
go ahead.
When you say the stock market, you mean like all stocks, or are you saying like just in general? Or
I'm not going to say necessarily all stocks in general, but you know, US 30 is comprised of the top 30 US stocks.
Right. Okay, I get what you're saying.
So
like
with
stock.
US 30 being the one that's going to fall, I would say we're going to see a pretty heavy decline in the top 30 US stocks. And if that shows to be true, then we know a lot of the other ones are going to follow suit because they're not even as high performance as the top 30, or they would have made it to the top 30.
Right.
You know what I'm saying?
Right.
So if the top 30s fall, and we can just assume that the top 100 is going to fall too. Like Nas 100. Nas 100 is the top 100, while US 30 is the top 30. So we could literally begin, and also with this showing, like in this form, or in this particular way, that's an ideal that we know people are leaving. We know people are leaving crypto to go. I mean, people are leaving stocks to invest crypto. All the major banks are leaving stocks to go crypto. When you think about what crypto really is a digital stock. That's really all it is in a nutshell.
True.
When you think of the base definition of a actual stock, all it is a safe haven or a passive income asset. Just think of it like that. A stock is nothing more than a passive income asset, which crypto is the exact same thing, a passive income asset. So now that crypto is really making a presence, and the big major banks are actually like, oh shit, crypto is really here to stay. People are really making money off crypto. Crypto is really a passive income asset. As this shit starts to click in their head, they're moving their money from stocks, because stocks are performance based on companies' revenues. And we know the economy's spending is decreasing. Stocks are going to fall too. The only thing that kept stocks up for the past year was the stimulus. They're not doing that again. So this time there's going to be nothing to hold these business revenues up. That makes sense?
Mm-hmm.
There's going to be nothing to help support the country's revenue, because they can't really do that stimulus again, because they'll be putting more debt. They'll be piling debt on top of debt when we were already in debt in the first place. So they can't dish out another $1 trillion or $1 billion, however much it was. They can't dish that out again 3 years in a row due to this COVID stuff. So this next one is going to be the aftermath of the extra debt they put themselves in. That's the fundamental side of what we actually see on the charts. Because what happens on the charts, of course, tells us what to expect fundamentally. Then when we actually see what's happening fundamentally, we know what's happening on the charts. So they run hand in hand. You kind of see how they run hand, fundamental and technical analysis run hand in hand. It's like you have to have both. Like technical analysis is 50% of mastering the currency markets, and then fundamental is 50%, and then your technical analysis is the other 50. But one runs hand in hand with the other. So back to what I was saying, they're not going to be able to hold business revenue up. Because like I said, the only reason business kept their revenue is because they flushed billions of dollars into the economy for people to spend at those businesses. This next go around, people aren't going to get that reimbursement, that unemployment, the PPP. They're not going to get that money to push into the market. So the businesses are just going to be sitting there dry with no customers. So when it comes to reports, their reports are going to be negative. When the reports are negative, the stock falls. You see how it's all running hand in hand now? And that confirms the pattern we're looking at right now. Just that fundamental data and aspect of what's going on economically captures and confirms that pattern. That makes sense?
Wow, yeah. Definitely makes
it's mind blowing, right?
Yeah.
Yeah, and I know once I get to talking, I spill out the world economy on
you. Right. I'm with it though. You know what I mean? Literally. Because if it don't make sense, if it don't make sense, I'm the guy that's gonna be like, you know,
right.
But I got the questions, you know what I mean? But shit, you break it down to the very last compound, like, you know what I mean?
Right,
because you know what you're talking about.
Yeah, I can literally ramble on about this shit all day long. So yeah, when it comes to this US 30, if you're going to be trading it, look to get in position at the high of the month. Here's the 4 hour here, all inside of that current pattern. But if we don't come into actually looking at what's going on here on the 4 hour and the daily, so to speak, remember, this is the peak that we identified to be D off of the higher monthly swing. So in that peak at D, looking at the daily pattern, we can see how that level's been holding as solid, solidified resistance with a doji. And we all know what the doji means at the end of a trend. Are you familiar? How familiar are you with candlesticks?
I'm pretty. I'd say a good 40-50% for me, because I got the ones in your group, so I've been.
Did you see that psychology book I posted inside the
Yeah, I did. I did.
I'm also going to post in the Candlestick Bible. Have you ever came across the Candlestick Bible? Okay, I'm gonna post the Candlestick Bible up, and by the time we're done with this session in the next 30 minutes or so, I'll have the candlestick posted inside the community too. The Candlestick Bible is really gonna bring you up to speed on identifying what patterns or what candlesticks to look for at peaks and that create swing lows and this, that, and other. It's actually gonna break down the Bible behind candlesticks. So it's really gonna add some arsenal to your game, especially when you're able to start pinpointing and identifying exactly what, say for instance, exactly what this pattern right here meant. This pattern right here is a buy pattern. And that's simply because although this was an aggressive bearish candle, the preceding bluish candle created a higher low and ate up half the body. more than half of the body, rather. Well, the technical definition would be 65%. And that is definitely just on eyeball. Me and you, I know we can eyeball this is more than 67% or 65% of the previous count.
Mm-hmm.
We can look at that and see that easily. But knowing exactly what that pattern meant would have gave you leverage to buy at the next open here. And of course, that's not just a couple dollars when it comes to trading US 30.
Mm-mm.
That would have been damn near 5 bands on a penny.
Mm-hmm.
You know what I'm saying? That would have been a pretty fucking penny right there. And just knowing what that previous double pattern meant that created this swing low, you would have been able to take full advantage of that pain-free. Even if it was just that candle and you took profit at the end of the day, that would have been pain-free, not to mention had you held it, you would have been able to ride it all the way to the all-time high, just based off entering off of that two candlestick pattern.
Mm.
And but this doji right here at the end of this peak, and of course, to identify a swing high or swing low, to truly identify a peak, a swing high or swing low, say for instance, this would be the peak candle, this would be the secondary peak candle, and this would be the candle right after. The peak candle form would be 0. This candle would be -1. This candle would be +1. As long as +1 and +2, both like on the left for a peak example, as long as +1 or -1 and +2 have lower highs than the peak candle, that's confirmed as a swing high. Same thing opposite for swing lows. The peak candle or the trough candle on the bottom when it comes to the downside is going to be 0. The two candles to the left and the right are going to be +1, -1. And then 2 candles over is going to be +2, -2. And as long as +1, -1, +2, plus or -2 have higher lows than 0, that's a swing low. And if you look at that all-time high up there, you can see 0 was the doji. The 2 candles to the left would have been +1, -1, and they have lower highs. And then +2, -2 both have lower highs than the previous +1, -1 right here. So it's actually a real clean peak high. But if you knew that what candle that was that formed, you would have known, okay, we're at a solidified swing high. And then if you notice, price never went back up there. And that's also, again, going back to the monthly, the candlestick pattern that formed C, on the ABCD pattern. So both of those confirmations are like solid gold. It's time to sell. And that you literally would have been at the all-time high and traded the stocks all the way back to the all-time low over the next 6 or 7 years. Would have been a trade you could literally go to sleep for 5 years, wake up, and still be in profit.
Mm-hmm.
And again, like I said, they're predicting a major stock market crash in the next 3 weeks. So all that technical analysis with the fundamental data all matches up.
So now still is a good time, more than ever.
Right. Yeah. So and then another thing is, since we know it's in a downtrend and this current candle's bullish, right now is one of the perfect time, is a safer time to even get in the position rather than if you would have been a seller right here. If you would have been a seller right there at the open, you'd be in the red right now at the beginning of the month. But as you waited another week and sold at the high, you would have caught the high of the month rather than the open of the month. And literally been pain free.
And so you would know the trend is reversed if if it create a new high after that peak.
Right here?
No, the before the retracement, the peak high.
The peak high?
So
Right,
yeah,
you would have known it. You would have literally had to wait for that candle to close, the next candle to open, and immediately as you seen this bearish candle that fell all the way and engulfed the previous one, soon as you seen it created a lower high and broke this candle's low, you would have known, okay, by looking to the left, and you already have 0, -1, and -2. You already have those painted on there for you. With those already confirming the swing high, this candle right here confirmed +1. This candle right here now is creating +2. But knowing what you had to look for with labeling the peak at 0 and knowing the left two were -1, -2, already given half of the confirmation to a swing high, you would have been able to trade the rest of it as it formed in real time.
And then from like here on, if it make a new high after the peak, then
right. Now the only thing that would reverse this trend is if they do make a new high and come back up here and close above this this peak here that created the initial swing high. But based on the pattern that's forming, this candle right here is not even going to take 50%. I can see it now. And if we pull out the Fibonacci, we can just essentially go from this high to this low, because that's all the Fibonacci is, and it measures retracements. That where I just dropped that line, I can almost bet you $1,000 that's at the 50%. Let's see here. If we pull it from this high to this low, right, that's at the 50%. That would be the 50%. And again, that would then create the A, B, C, D pattern. I love A, B, C, D pattern. And from there, of course, once we have A, B to C, we use our expansion to go from to get the expansion from A, B to C, which would in fact bring us right up in here. But that's only measuring what's in here on this trend, which is likely what I just measured out was likely the daily or the 4 hour. Let me see. Yeah, it was the daily. So just this move here is essentially just a daily swing. And the daily would bring us back in here. And just to confirm that that would truly be A, B, C, D, we would then not only rely on Fibonacci and its ratios, just look for structure. And if we look to structure, it's sitting right there. It's like magic sometimes. Got any questions about anything I've been jabbering about? I didn't realize it was already 3:30.
No, not really. I mean, I'm gonna do more research
Go back
into
and see
this
if there's anything I
ABCD.
missed. Okay, now as far as time, are you going to be able to catch any of the boot camp this week?
Yeah.
Okay, perfect. Because we'll be able to touch more on the actual timing in real time. Okay. Because what we're going to do is we're actually going to take positions and enter and exit position right then and there on the live session, as well as set our TPs, our stops to profit, and all that type of good stuff.
Okay.
So we'll go over the stop losses and timing in real time throughout the whole boot camp. Every single trade we're going to go through, basically tracking the trend, key levels, stop loss, and timing on every single position we take.
Okay. Is it gonna be the whole month of October, or is it gonna be Like once a week?
Yeah, we're really gonna run them every month. So this is just gonna be boot camp. I'm labeling it boot camp session 1.
Okay.
Then next month we'll do boot camp session 2. Boot camp season 2, 3, and then so forth on and on and on. It'll be a new season every month. And then by Christmas, we'll have the funded account program. So by going through boot camp, you'll get a funded account.
Okay. Yeah, because I got a couple of people who was telling me about FTMO and some other ones too.
Right. Yeah, FTMOs are real popular now. When we establish ours, it's going to be the currency matrix, of course. It'll be similar to FTMO, won't be as pricey as FTMO. And say, for instance, FTMO has $100,000 accounts. Mine will probably produce, I'll have anywhere from 10, 25, and 50.
Okay. Perfect.
So that's gonna be releasing by season 3, that'll be dropped. And then we're gonna keep building around boot camp and getting people funded. They come in, get funded. They come in, get funded. And of course, those who have been funded are gonna be here for the long haul. And eventually, I'm going to give them the opportunity to showcase their skills on a lot and maybe possibly host a boot camp of their own.
Right. Hopefully I'm able to do it.
Oh, most definitely. You'll definitely be able to do it. All you got to do is, stick at it and keep and master this shit. You're learning from one of the masters in it, so you're good to go.
Yeah, and I'm definitely grateful too. So like you said, I'm finna just get focused. And what's a couple of things you think I should be able to, like, all right, so the book, I'm gonna read that book. The book you said you're gonna send me, the Candlestick Bible. Cause I got one called the Trade Society or something that I'll be reading. But I was trying to see some other stuff that I could focus on, but I think somebody did tell me.
The one that's going to be very clutch is going to be the psychology book that I posted this morning.
Okay.
In sync with the Candlestick Bible. The psychology, because really when it comes to trading, it's 90% psychology and 10% of what you see on the charts. Because you can map out the charts all day long like we did just now, and then the psychology still have you on the other side of the stick. And the psychology is just comes down to your risk management, not over trading and things like that. Like that book is 300 pages long. Might take you a while to read, but it'll be worth the read. I'm still reading it myself.
Mm-hmm.
But it'll definitely help tune your psychology. Had I read it when I started, it would have been a smoother journey. You know what I'm saying? Had I read the psychology part first, it would have been a smoother journey because psychology is 90% of the ballgame. I learned everything about the chart, learning the psychology as I went along. Rather than understanding what to expect in advance, I had to learn it firsthand in real time for myself. You know how they say sometimes you got to learn the hard way.
Right.
If you don't have a guide or follow instructions. I didn't really have a guide or any instructions to follow. So that's why I created the guide and the instruction to follow.
Mm-hmm. Makes sense.
It's all, I guess you could say, all authentic.
Sound like it's a part of God's plan. Blessing,
right?
Like me.
And amen. That's what I keep telling myself. And that's how I was able to keep going. Because even to this day, I'm going on probably $54,000, 54,000 hours straight in the currency market. And you know, they say it takes 10,000 to master a skill. So in a sense, thinking of it by from that perspective, I mastered it 5 times already. So now it's like I'm at the point where I'm prepared to share it a little more fluently than a lot of other people that are still learning themselves, because 9 times out of 10, they're nowhere near 54,000 hours.
Right. Right. Because most people that got that many hours in it is not trying to train people no more.
Right. Facts. They not sitting there they're not sitting there teaching a classroom full of people. They off on like the trillionaire yacht, not paying no attention to nothing else.
Not blessing nobody, man.
Facts. Thank you. Amen. Also, one thing I want to point out about this C to D movement is look at the RSI. Remember what I said about the RSI? When it hits below 50, it starts trending down there. When it's above 50, it's trending up. And as we look, price action and the oscillator match up with that. But as soon as it breaks down here, now it's going to start trending like this.
Oh, okay. I get what you mean. Okay, I get what you mean now.
And that's how the RSI works.
Okay. And that's why you said the 50 is like a resistance for support in a way.
Exactly. So when you know you're on an uptrend and you see the RSI down there at 50.48, you need to be looking to expect a buy pattern. And that's what the candlestick Bible is going to help you identify. It's going to help you identify patterns that need to be identified in specific areas, like right here. And right here on these little pullbacks. Candlestick pattern, and that little one candle pattern that I showed you earlier, that's what the candlestick pattern is going to help, the candlestick Bible is going to help you identify what patterns to expect and where to expect them. And if you look down at the RSI in respect to this particular retrace to the 50, you can see how they both match up and what exactly happened. Even here. And then look at the break when price crossed over the 50. Then look at this bump here at the 50. And that's how the RSI works. And this particular one that I use is color-coded green and white for the matrix. So when it's white, you know you're below the 50. When it's green, you know you're above it. So you automatically know what to be looking for based on the color. Were you able to download the template?
No, where can I get it at?
Okay, the template is inside the community under review. I posted it last Monday. So what you'll have to do is log into the community on the computer. Do you know how to install a template on MetaTrader 4 and Indicator? If not, I'll post a video on how to do that as well. Because if you're not sure how to do it, I'm sure there's others that don't know how to install that template. Excuse me, as well. Right. So I'll go ahead and post a video on how to install the template. But in order to
because I gotta download MetaTrader on my computer, right? Or I can do it online. I gotta download it.
Yeah, you just gotta download it, and then of course go into your file, your open data folder, and install it that way. But it should be on last Monday or Tuesday under the review topic. And I went ahead and recorded this. If you got any questions for me, I'm gonna go ahead and record those too, because I might answer somebody's that you might have the same question somebody else does once I post this recording.
Not at the moment. I mean, the only thing you kind of mainly answered it mainly like with the in the candlestick Bible is the 0, or a -1, a -2, or a +2.
Yeah, it'll teach you it'll teach you about swing highs and swing lows.
Okay,
for sure.
Okay, and then yeah, that's pretty much it. And then I just need to get a little bit more familiar with.
So one thing about
understanding reversal
identifying.
trend.
Sorry, I didn't mean to cut you off. Go ahead.
No, I was just saying I just need to get a little bit more confident with knowing reversal trends, so I'm not placing a trade when I know it's a trade. You know what I mean? Or I mean
Right.
a buy or a sell, and I'm not pulling the trigger because I'm thinking maybe it's a reversal or something like that.
Right.
So
and a lot of people get caught up in thinking it's a reversal when it's actually an extension. And so one thing you can start to do and start to factor in before you pull the trigger is consider the current candle that's forming 0 and automatically see if you have -1 and -2. Because if you have 0, -1, and -2, you can highly anticipate +1, +2 coming. But if you don't have -1 and -2, then you likely don't even have 0 and price is not reversing. That makes sense?
Mm-hmm. So you say because the doji is 0, right?
On those particular numbers and swing high identify over the next. I'll get into that probably within this first week.
All right.
And with the market being so repetitive, we'll probably go over it almost every day. Because with it being repetitive and so consistent, we'll probably literally, the session flow will likely be the same every day. Identifying the high low, identifying the swing, identifying the support, identifying the resistance, identifying the key trigger level, and actually pulling the trigger and putting our stop. That's literally what we're going to do every day over and over again.
Let's go. Makes sense.